Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So you might have been watching already, right? The stock market has been plunging for quite a couple of days here. When we look at the S&P 500, a complete annihilation type of day in the S&P, in the technology index, NASDAQ, also selling off, Russell 2000, the Dow Jones, VIX picking up as well, up 11%. Right, last time when we had a massive plunge, we did see the VIX in April 2025 sell off when we got the whole beginning of Trump coming in and slapping tariffs. And we're seeing the VIX not to the same elevated levels here, but picking up to levels that we saw in October of this year. So will it break it higher? Will we see S&P 500 continue to plunge lower? That is something that we will continue to monitor and see. But when we look at the technicals here, it is not looking good. Where S&P, yes, has dropped 5%, almost 6% from the top here. And if you remember in my previous videos, we talked about this whole trend line and this bull trend that the markets have been in for quite some time. Let me just put it in the monthlies. So we have bounced here quite beautifully, rejected here quite beautifully, and we're seeing the pullback now in the S&P, right? And all on the fears of this whole momentum that people feel that the markets are have gone a little bit too far and valuations are stretched, and this whole AI narrative, which people are worried about this bubble that just keeps inflating and people spending left and right, and even though even the accounting practices of Nvidia and some people arguing that how a lot of these AI companies are accounting for revenue, they may not agree with the methodology, which is what is making their valuations inflated and making it basically fake. So regardless of what the narrative is and what the catalyst is, all we know for sure is that the equity markets, whether there is a bubble or not, whether you agree or not, we see the equity markets plunging here, and the technicals do, they don't look good here. And we did break the 20-day, the 50-day, and here just also today breaking the 100-day moving average. And it'll be interesting to see where this will find some support. Maybe somewhere in the middle here, around 6,400 maybe even lower to the 150-day moving average of 6,300 in the S&P. So, when you look at the grand scheme of things here, this is just a 5% move. Can we get a 9, 10, 11% move? 100%, all doable, right? And this sell-off here, if you remember the start of the year, was about 21%, right? So you might be panicking on just 5%, but let's not forget about this moment here where the markets really sold off 20% and then finally rebounded, right? So can we see something like that show up? And a 20% dip and then, markets to pick back up? Anything's game, anything's possible. Now, on top of this, there are signs of worries, like, for example, the JGB yields, moving up higher. We have Japanese bond yields moving to unprecedented levels, basically creating fears on this whole yen carry unwind trade that could happen. And not only you have that, but also you got non-farm payrolls report that came out, which was the previous September report, came out better than expected. However, the unemployment rate went up a tad bit, but most importantly, the previous revision numbers went from positive, I think it was 22,000 jobs, to negative 4,000. So a negative payrolls number, creating kind of fears around growth and uncertainty in the job market, especially with everything that we're hearing from the news, right? From a lot of these layoffs from tech companies, saying that AI is taking over, so we need to lay off workers, and other companies as well laying off for reasons of higher cost or just lower demand, right? Less people buying, and people feeling the pain and the pinch in this K-shaped economy, and not spending their dollars. So all of this is being mixed and grinded into a concoction here, and this is where we're seeing kind of the top being formed, and where we got the rejection, where the S&P did reach up to these levels close to 7,000, didn't touch it exactly, and now we're seeing the sell-off breaking through moving averages on all this, again, fears of AI, bubbles, valuations, and etc. So is this the end of the world? No, not exactly, because we're just down 5%. It means nothing, right? Are there things to be concerned about? About 100%. Right? Like I said, the job market, the K-shaped economy, bubble valuations, and accounting practices, etc., etc. But, time will tell, and it's really the market will dictate whether that's true or not. Now, on the other hand here, when I look at the bond market, yes, did see a nice bid up today. But no really sudden panic in the bond market. Spreads, high corporate bond yield spreads, even investment grade spreads, bond yields, treasuries, 10 to 2 year, the yield curve, all of those are pointing towards everything is normal and fine. It's just here we have kind of sell off in the not only in equities, but yes, you do have it in equities, you do have it in Bitcoin, you do have it in oil, gold, and all markets. But yes, and the bond market moving up, creating this risk off environment, and some saying even a deleveraging moment. But in terms of like panic, especially from the bond market, I would say no, because I don't see it there. So can we continue to sell off and then find some sort of support later on? 100%. Can we sell off another 5% more and then rally up? Sure. Can we sell off 20% and then rally and make all-time highs? Sure. Can a big Black Swan event come tomorrow? Sure. Can there be Black Friday happening tomorrow? Possible. Anything is game. But for now, when you're looking at things here, just letting the market tell you what's going on and what's happening, we see here that the technicals are looking weak, and that suggests that we could see more downside. Now, some argue that this here is a head and shoulders formation, which could lead to selling in the S&P that could bring you all the way another 4, so basically to that 150-day moving average, very close to the 6,400. So that's a technical formation that people talk about. Here as well in NASDAQ, we could see maybe the same thing here. So technically, again, just looking at charts, it is looking very bearish. Another big thing I want to mention also with all of this is that we had today a lot of the tech names start in the green, right? Google, Tesla, Apple, right? We were all in the positive. Google even making all-time highs and completely reversing everything. Apple, same thing, beautiful move up and then massive sell-off. But the biggest thing I want to note is Nvidia here. So Nvidia beat earnings yesterday, beat and raise, and we had a nice move up here in the post-market hours, and pre-market it was kind of hovering here. But when the market opened, especially late in the morning, we did see aggressive selling in Nvidia, and we're still seeing more selling here in the post-market. So this is a big, you know, in my opinion, red flag here that you had the best of the best. You had everything. You had the expectations here, and you had a company that beat it sky high. Basically clear fears temporarily about this whole AI thing and this bubble and valuation and momentum, which caused stocks and the big tech names to move up, then to completely vanish with having the best of the best results, especially from Nvidia, to completely do a U-turn and post the day from 3+ percent positive to now about -3%, right? So I would flag this as a big red flag here as a potential sign for Nvidia showing signs of exhaustion here and a potential of more downside in the stock. And again, head and shoulders formation, which some may argue that technically we could see Nvidia maybe go down to the $150 mark. So another maybe 17-18% down. Possible. But I just want to mention that reaction in Nvidia is definitely a no-go, and not a good sign. Another thing I also want to bring up is Bitcoin. I know a lot of people, including me, are very bullish on Bitcoin, and they like to talk a lot about it. And it's been acting weird, especially how gold ran up and for a period of time and Bitcoin was lagging behind. And it was following more equities, and then it kind of just stalled and topped here at 125K. But Bitcoin is actually a market you want to keep an eye on because it's been leading this sell-off. We've been seeing Bitcoin trade near lows, break lows, and then the stock market and the equities follow the same momentum. So, you know, it's funny, Bitcoin is a type of market that is always changing. Always. One day it wants to act like gold. One day it wants to correlate with stocks. One day it wants to do its own thing. One day it wants to decouple from everything. Generally, it does correlate more with risk asset and NASDAQ and stocks. But here, this time, instead of stocks leading the way, Bitcoin's leading the way. And we're seeing stocks pull down as Bitcoin leads the way and plunges further. We see stocks following that same trajectory. So very interesting keynote there to keep in mind of. So tomorrow's Friday. We'll see what happens in terms of the price action. And in terms of markets, I think we could see Asian markets possibly dump here, especially when Japan wakes up. And then tomorrow we could be on Friday lower than where we are right now. That's a possibility, especially as we still are selling off here in the post market. So anyways, let me know what you guys think. Do you think, you know, this is all done with? Did the bubble pop? And is this the end? And do we plunge 10, 20, 30, 40, 50, 60, 80%? What are you guys' thoughts? Let me know what you guys think. Leave a comment below. Subscribe. Hit the like button, bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.